technical standpoint, it just does not look good at the moment. It is completely declining, forming a lower low pattern, which is not suitable for trading. So from a short-term perspective, I would recommend it is better to avoid this stock.
Got it. Understood. And let's take up another WhatsApp query. Sampath has written to us from Kurnool in Andhra Pradesh, and he's saying that he holds 1,009 shares of Irida at 157 rupees, and he's asking for a long-term perspective on this one. Now, Irida plays a crucial role in financing renewable energy projects in India and is classified as a Navratna company under the Ministry of New and Renewable Energy. Prashant, I'd like to take your view on this one because he is particularly asking for a long-term perspective on Irida. Do you think it has a bright future given the space that it hails from?
I think yes. Again, renewable energy would be a story for long term. Again, it's not a short term story. But considering the recently correction in the stock, again, it gives a great opportunity for a long term investors to add more. As well as he's holding it, I think he can add more on dips for accumulating this stock for long term. But it should be looked at as a portfolio stock, not a trading stock.
Okay. And Gaurav, what's your view on Irida? What do you see as a support level for this particular stock, and to what extent can we see the stock run up in the next 1 or 2 years?
140 was a support, near-term supports, and it tested, and it is currently on the verge of a bounce back. So what I'm expecting currently is that we should see a relief rally from current levels that can scale up to 170. And if the stock is able to sustain on a closing basis above that level, then even 180 to 190 levels are also possible. This is the immediate levels that I'm looking at. But when we look at a very long-term perspective, say for a year or more than that, then it is important that the stock go passes these important moving averages. The confluence lies somewhere around 190 odd level, so it is able to sustain above that. Then a further run up towards 230 to 240 is also possible. But as of now, what I can see is 170 to 180 is pretty much on cards.
Okay, got that. Thanks for that view. And now we have Gurmeet. He's calling us from New Delhi. Hi, Gurmeet. Good evening.
Good evening, ma'am.
Please ask your question.
Yeah, I have 500 shares of NCC Limited, which I had bought previous year at 275.
Okay.
And I want to know whether I should hold or sell or buy to average. And if I'm advised to sell, then what other share to buy and at what time, ma'am? And what rate?
Got it, got it. And you're currently sitting on a loss of close to 40,000 rupees as well. Let's take your view from both our guests. Prashant, I'd like to start with you first. Gurmeet holds 500 shares of NCC at 275 rupees a piece, and he's asking whether he should hold or sell his shares of NCC at the moment. Now, NCC has seen a significant decline in the past couple of months, especially from December 2024. It has been on a downfall and has shrugged off close to 28% just from the start of this year. What's your view on NCC looking like at the moment?
The correction was only on the back of the market correction in the mid cap and small cap space. But overall, again, it is into infrastructure space, road, building, irrigation, water, environment, electrical and metal and mining and railway. So almost all sectors are very important for India. I think it has a good order book for long term. Despite correction, I think I'm very, very much positive to buy more at this point of time. Again, with respect to valuation, very comfortable, a forward earning of almost 12 and a price to book value of almost like 1.5. So a great price, a great level right now. Obviously, there may be some kind of small short-term pain in the Q4 earnings, but I think moreover, it has been discounted in the price. So hold on to the long term.
Okay. And Gaurav, do you recommend buying at the current juncture as well? And if you could give us a price band in which a viewer can buy at the current time.
First of all, I completely agree with what Prashant has said. On technical chart point, also it seems that the worst is behind us. And these are good levels to buy. If the viewer is having some spare money here, then these are good levels. He should consider averaging the stock here. It has retraced 61% from of the recent ride, which is a very good level to start a fresh buying level point also. So currently the stock is trading just under 200 odd levels. He can consider averaging it here and look for targets close to 240 or even 250 levels in the coming 1 to 2 months only. And if he's keeping a little longer view, then even 280 is also quite possible.
Okay, that's the view coming in from NCC. And now we have another WhatsApp query. John has written to us from Puducherry, and he says that he holds 18 shares of Jyothy Lab at an average price of 357 that he bought a month ago. Now he's asking if he should add more units of this stock to his portfolio, or should he hold on to whatever he has at the moment for the next 2 years? Now, just a bit on Jyothy Labs, it operates in the consumer sector, focusing on personal care and household products, and has been recognized for its strong brand presence in our country. But the stock has experienced fluctuations recently with a notable drop from its 52-week high. And therefore, Prashant, what's your view on Jyothy Labs?
So near term, I think there will be some kind of dip coming more because of two reasons. One, again, the earnings are not visible. Q3 earnings were not so good. If you compare Q3 earnings with respect to EBITDA margins, it has fallen from 19% to 16%. So I think I'll be waiting and watching for Q4 earnings. It should at least give some kind of better margin. Then only I'll be very positive on the stock. But again, with respect to valuation, still not so comfortable to have a very closer immediate buy at this point of time. I will wait and watch at least for more fall, at least for 10% from the current levels.
Okay, got it. And we have a caller joining us from Himachal Pradesh. Hi, Paramjeet. Good evening.
Good evening, ma'am.
Please ask your question.
I'm having 1,000 shares of EIH Hotels at the rate of 350.
Okay.
Want to know long term as well as short term view.
Okay. And when did you purchase these shares, Paramjeet?
Recently.
Okay. And for how long do you want to hold on to them?
I want to know both long term as well as short term view.
Okay, got it, got it. Prashant, I'd like to take your view on EIH Hotels to get a long-term perspective. Our viewer holds 1,000 shares at 350 rupees a piece. Do you recommend him to hold on to this particular share for a long term?
With respect to hotel as a sector, we are very much positive. I think next 1 or 2 years, hotel business will be very much aggressive in terms of their occupancy levels. But with respect to EIH, I'm not so comfortable. Again, valuation is a concern at this point of time. Also, again, there may be some kind of short-term dip. I think the recovery from the last recent 10-15 days, I have already taken a lot of positivity in the stock, but upside is very limited. If there is an option, I think he has to exit at this point of time and look for any other hotel stocks. We like Lemon Tree a lot, so I think there can be a shift option for him from EIH to Lemon Tree.
Understood, got it. And Gaurav, what's your view on EIH Hotels?
From a technical standpoint, some more upside till 420, 400, 420 odd levels are left. And if the stock is able to sustain above that mark, then only some further room for upside would be seen. But having said that, Indian Hotel is a much better bet that one can consider. And yes, of course, Lemon Tree is also something that is available at a very attractive rate, currently quoting around 135. It has given a good corrective phase and is set for a fresh up move towards 155 odd levels. So Lemon Tree and Indian Hotels are the two that I would recommend to buy for the near term trades.
Understood, got it. And now we have Elsa. She's calling us from Chennai. Hi, Elsa. Good evening.
Hi, good evening.
Please ask your question, Elsa.
Okay, my query is regarding Petronet.
Okay.
I have holding 507 shares.
Okay.
So in long term or short term perspective, what I need to hold or sell?
Got it. And when did you purchase these shares, Elsa?
It's September.
Okay. And at what price did you purchase
I
them?
bought at the price of 330, and last week I have averaged it and it's come down to 313.
Okay, so 330, right?
Yeah, now it's averaging 313.52.
Okay. So 313 is your average price.
Yeah.
Okay, got it. Gaurav, I'd like to first know your view on Petronet. Elsa holds 506 shares at 313 rupees a piece. She bought them recently and is sitting on a loss of close to 8,000 rupees. Although the stock did well today, it was up close to 3.5%. But how do you see the future trajectory of the stock? Is there more room for upside?
Yes, there is pretty much room for upside. She should hold on to her position. If she has some spare money left, this is the time to average it out. 315 is the immediate upside level, and beyond this, the stock has good potential to even test 335 by the April end. So I would recommend a buy on this stock.
Okay, so it's a buy on Petronet LNG, and I'd like to know your view on this one, Prashant, and especially if you could also comment on the oil and gas space altogether.
So overall, with respect to stock, very bullish. Again, two reasons. One, I think the sector which is into almost oil and gas. Gas is a sector where we are very much bullish going forward. I think India as an energy sector, I think there are a lot of opportunities left out for a good growth. India being a very Atmanirbhar in terms of generating gas, and as well as the industries which are using lot of gas would have a good cost benefit there in their operating margin. So I think Petronet Energy is in a great place right now. Capitalizing the growth going forward in the Indian gas sector. But with respect to valuation, very comfortable. Forward P of almost 10, price to book value of less than 2. I think it's a great time. The correction is an opportunity for the stock. She has done well. She has accumulated again on dips and made her cost lower. So I think my target would be anywhere between, again, Gaurav's target. I think 320, 340 can be a short-term target on fundamental basis.
Understood. Got it. And let's take up another query written to us on WhatsApp. Vijay has written to us from New Delhi, and he holds 165 shares of LIC at an average price of 920 rupees per share. He's asking, what is the outlook of this share? Should I average or hold or book my losses at the moment? He's sitting on a loss of close to 24,000 rupees. And should he hold on to his shares for 1 year? Now, LIC remains a significant player in the Indian insurance market and has also recently announced its plans to foray into the health insurance space. As a result, it was up in trade today. As you can see, it was up close to 2.5%. Prashant, what is your view on LIC? Do you think it's going to act as a disruptor in the insurance space, or give us some analysis?
So this is a white elephant sitting with big market share in India. Obviously, whenever people talk about insurance, they talk about LIC, but the tagline which says "Zindagi ke saath bhi, zindagi ke baad bhi," I think the investor should hold it for a very, very longer term to get a good, profitable, rupees return for their investment. I think the private sectors are doing very aggressive in terms of their business, but LIC is still slow in terms of going forward. But in your recent news with respect to the health insurance foray, I think it will take its own time to get into this, because the way they are working right now in the life insurance sector, so they will be the same culture, they will be using it in the health insurance sector. But obviously, for a long-term investor, it will take its own time to deliver returns. But obviously, at this point of time, I think with respect to valuation, again, very much comfortable. Almost 4 price to book value. That can be a decent price for any long-term investors to add fresh. But the investors already added it. I think hold it for long term. Whenever the cost comes down to its level like 950, 940, then he can rethink what to do in this stock.
Okay. Thank you so much for that view. And let's take up another caller. Sanjay is calling us from Surat. Hi, Sanjay. Good evening.
Yes, madam. Very good evening.
Please ask your question.
Actually, I want to invest in Mazagon Dock.
Okay.
I have not a single stock in my portfolio, but right now, is it a good time to invest in this stock? And if so, if I hold it for 12 to 15 months, what kind of return should I expect?
Okay. Got that. Prashant, do you think Mazagon Dock is a good defense stock to currently enter? Because it was up close to 10%, but has been sort of plateauing since July 2024. And, defense did well as a space in the past couple of years. But do you see it continuing that momentum in the coming 2 to 3 years as well?
So it will take its own time to deliver return to the investor from the current levels again, because last 2 years were really great. These sectors were under-owned by fund managers, under-owned by a lot of investors. Then suddenly a lot of order book has come from Indian government, so that the visibility of earning was very clear. So the stock has rallied. But now again, I think there is a good question to be raised with respect to execution. And these businesses are very slow again. I think with respect to valuation, again it has started trading above 40p and price to book value almost 14. So I may not recommend him to buy more at this point of time. Wait and watch for good correction. If the stock price comes down to anywhere between 2000 can be a good level if by any reason the stock comes down. But overall, the sector is very bullish. The focus is very high with respect to government as a long-term investor. Again, 2 to 3 years. But right price, I may not comment on that.
Okay. And Gaurav, because Prashant has already mentioned that it might be fundamentally a strong company to invest in, But however, the current levels at which an investor could invest looks a little dicey. If Sanjay had to invest in Mazagon Dock at the moment, what kind of returns do you see Sanjay making in the next 15 months?
First of all, it is better to wait little bit here, because today we have seen a good healthy up move in this stock. I would suggest him at least wait till 2450 levels, then consider buying the stock and look for targets close to 3,200 in the next 12 to 15 months. That is what looks pretty much practical at the moment, because buying the stock today when the stock has already rallied from 20 to 50 and currently trading around somewhere close to 2650 odd levels is actually not advisable.
Okay, got that. And let's take up Rajan. He's calling us from Bengaluru. Hi, Rajan. Good evening.
Good evening, ma'am. Thank you for taking my call.
Most welcome, Rajan. What's your question today?
Yeah, my question before that, I'd like to thank you also for the program that you run called KYC, which is an extraordinary program. Very interesting programs of NDTV Profit.
Thank
my
you.
question quickly.
Yes.
I hold 4,000 shares of Canara Bank at 111 average.
Okay.
And I'm looking at a long term.
Okay.
As long as it takes.
Okay.
Yeah. What's the prospect?
Understood. And Rajan, thank you so much for sending in your compliment on KYC. We will definitely, forward this message to the team. Thank you once again. And I will take up your view. Prashant, Rajan holds 2,000 shares of Canara Bank at 111 rupees a piece. And the bank did see an uptick of close to 2% in trade today. But overall, it has seen a gradual downward trend since July 2024. However, the bank's asset quality and credit growth remains relatively stronger than its peers. From that perspective, do you recommend Rajan to hold on to these shares? And can he add more, since he is looking for a very long perspective on this one?
I think yes, add more at this point of time, accumulate the stock at near to 80 again. I think that would be a great price for a stock like Canara Bank. With respect to asset quality, you rightly mentioned they are doing really great with respect to their peers, which are almost like Bank of Baroda, Punjab National Bank. And when you compare these 2-3 banks, I think Canara Bank stands very much positive. In terms of, again, with respect to business growth, again, every quarter they have delivered very well. CASA has been stable and the CASA has been growing again. NIM margins have been stable. Again, I think next financial year, with the help of how Government of India, RBI is supporting for high liquidity push through all the liquidity measures they are taking. So I think that will bring a lot of business growth, credit growth, and as well as deposit growth in the banks. That too PSU, and Canara Bank stands well at this point of time. So I'm very much positive. Buy more and accumulate at this point of time.
Okay, got it. And now we have Vijay. He's calling us from Hyderabad. Hi, Vijay. Good evening.
Yeah, good evening. I'm having 150 shares of PG Electroplast.
Okay.
At the price of 850.
Okay.
For short term. So I want to know the fundamental and technical view on this.
Okay. And Vijay, just to get your query answered better, I'd like to know for how long do you want to invest in this? Like how short?
Yeah, like 3 months.
Okay, 3 months view. Gaurav, I'll pose this question to you. Vijay currently holds 150 shares of PG Electroplast at 850 rupees a piece. And the stock is currently hovering around 893 odd levels. It was up close to 1% in trade today. Unlike most stocks that have declined and shrugged off weight in the past 6 months or 7 months, PG Electroplast has had an upward rally, but is slowly shrinking. What's your view on PG Electroplast, and for the next 3 months, what kind of returns do you see Vijay making?
Yes, PG Electroplast, you rightly mentioned, it has performed exceptionally well in the recent past when the entire market and the broader indices were declining. This stock not even held ground, rather advanced. Technical charts are looking pretty impressive. He should hold on to his position. If he has some spare money, he should consider buying some more here. And I see the stock testing 1,050 and even going up to a fresh lifetime high beyond that in the next 3 months. It's a buy from my side.
Okay, positive view on PG Electroplast. And let's take up K. Ghosh's query. He's written to us on WhatsApp and he is from Kolkata. He's told us that he holds 20 shares of Bombay Stock Exchange at an average price of 4,200 rupees a piece. And he's asking whether he can hold on to these shares for 6 months from now. And he writes to us saying, please advise the long-term prospects of the stock. I can hold for 3 years as well. Now, this particular company, BSE, has higher P ratios compared to its, as compared to the industry average. It was up close to 5% in trade today. However, Prashant, I'd like to take your view on this. Do you recommend K. Ghosh to hold on to his shares of BSE for the next 3 years, given the kind of momentum, or I'd say fluctuation that we're seeing in the interest of the public towards investing in the markets?
So for near term, I think yes, obviously that may be some kind of neutral to positive. But again, the investor want to have this share as a long-term investment. Very positive on the sector as an exchange. Trading and clearing businesses are growing very fast. Again, services to corporate with respect to listing prices and all the fees they are collecting. I think there are huge business opportunities in the business with respect to the segments which they are into. Very positive. I think that would be a great opportunity for investors to hold it as a long-term portfolio. Short-term volatility may come with respect to changes in the regulation with respect to market volatility, and there may be some kind of stable growth with respect to their earnings. But overall, I am very positive to hold it for a long term, at least with a target of 6,000 from the current levels.
Okay, got it. And now Shrikant is calling us from Hyderabad. Hi, Shrikant. Good evening.
Hi, madam. Good evening.
Please ask your question.
Fundamentally, the strong water recycling low, best of the stocks, sir. Long term is 5 years. Sir.
Okay. Did you just say that you want a long-term view, around 5 years, on water treatment stocks?
Fundamentally,
strong stocks. Okay, so you want fundamentally strong stocks in the water treatment space.
Mid-cap, no, madam.
Mid-cap stocks. Okay, we have one more filter. You want mid-cap stocks. Cool. Let's try and get you this answer. First, let's go to Gaurav. Gaurav, what's your view on water treatment space? Do you identify some heroes at the moment in this space?
Vortec Babavik is one share that has been in this particular sector for doing good, and it is also seen accumulating on charts. So one can consider accumulating the stock at current levels, which is somewhere just under 1400 mark, and add on to it once it surpasses 1550 and look for targets close to 1800 to 1900 in the next 6 odd months. So this is one stock that is always been on our radar, and we generally recommend it to our clients as well.
Okay. And Prashant, could you give us your fundamental view on water management space altogether? How does the space look like, and what kind of growth are you seeing?
I think there are very little companies, very less companies with respect to water treatment and wastewater management companies. Vortec Bank is again one of the largest in terms of market cap. Again, the second stock would be the recently listed company, something called as Enviro Infra. Even that is also good in terms of valuation. Again, both are trading almost near 25 to 30 forward pay. With respect to again ROC return wise, I think Enviro is doing great. I think 40 plus ROC and 50 plus ROE. So I think this kind of business models will obviously generate a lot of long-term return for the investors. Obviously, industry there is a huge growth. I think 30 to 40% growth can be seen year on year with respect to water treatment and waste management projects. So I think that would be a great project because of lesser companies which are listed and lesser companies which are doing great. So the valuation may trade a little bit premium, but I think as a long-term investors, every dip has to be bought.
Understood. And viewers, we'll have to slip into a short break, but keep sending in your queries on WhatsApp as well as call in on the numbers flashing on your screen. We will be right back for Ask Profit. Do stay tuned to NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter. And
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every unloam, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers, and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000...
Welcome back to Ask Profit, only on NDTV Profit, a show where you can ask your queries and call us live on the numbers flashing on your screen. You can also write to us on WhatsApp. Today we're being joined by Prashant Tapse on the fundamentals and Gaurav Sharma on the technical. So do call in on the numbers flashing on your screen. Let's talk to Mailsami. He's waiting for us from Coimbatore. Hi Mailsami, good evening.
Good evening all of you.
Good evening. Please ask your question.
I am having 10,000 shares of IOB, bought at ₹25.
Okay.
I want to hold for long term.
Okay.
What's your opinion on this stock?
Okay. And Mailsamy, when did you purchase these shares? Because I can see you're sitting on a handsome profit of close to 2 lakh.
1 year back. 1 year
Wow, 1 year. Great. And how long are we looking at, Mailsamy? For how long do you want to hold on to these shares?
back. 5 years.
5 years. Okay. Prashant, we have an interesting stock. Mailsamy holds 10,000 shares of IOB at 25 rupees a piece. The stock is currently trading around 43 rupees, was up in trade close to 3% today. But some of the things that I notice about the stock, and I'd like to get your view on this, it is that it trades at a very high P multiple of 26 as compared to its peers. And although on the stock market it may have given great returns, but do you think it's expensive? And from my follow-up on that would be, should Mailsamy book a part of his profits, if not the entire chunk?
I think yes, you rightly pointed with respect to valuations, very, very expensive, by not with P, but again, price to book value, which is trading almost near 2.8. So PSU banks usually trade at 1 to 1.5, which can be a great price for a long-term investor to add more. But he's already making good profits at this point of time. I think the investment is very bold, and then he would like to hold it for long term. I will not recommend him to add more, but try to book profits at anywhere at a good levels. The upside can be limited from the current levels anywhere between 50 and 52, as per my understanding. Then again, there can be some kind of profit booking, because again, valuations gets more expensive at those levels. So I'm not negative on the fundamental side with respect to PSU as a bank sector. There will be huge liquidity growth, credit growth may come in next 1 or 2 quarters, that will also drive more profitability. Good NIM margins can grow. Upside is limited, downside is also limited from the current levels, but obviously you will have a lot of other banks which can give you more upside from the current levels, the way how we discussed about Canara Bank. So I think booking some profits and shifting to any other which are valuation based best PSU banks where the growth will be similar. So I would like to recommend him to sell some and add more any other PSU banks.
Okay, so you must book your profits, Mailsamy, on IOB and invest in any other counter in the same space though. Let's go across to another caller. Raman is calling us from Delhi. Hi Raman, good evening.
Hello. Good evening.
Good evening. Can you ask your, hello, can you hear me?
Good evening.
Okay, Raman.
I'm having 120 shares of User Microfinance at the price of...
Okay, Raman, I'm so sorry to interrupt you. You have a patchy line, so I'll just take up your query. Raman holds 120 shares of Fusion Finance at 520 rupees a piece. The stock is currently trading around 153, was up close to 12% in trade today. And I could not really know the kind of view that he wants, but let's take a long-term view on this one, because the price has fluctuated significantly over the past couple of months, with a recent high of 148 on March 13th, 2025. Gaurav, how does Fusion Finance look on the charts? Because I can see that it has taken several steps and has only gone downwards in the past 1 year. Do you see it will be able to recover anytime soon?
On charts, it just does not look good. No signs of recovery are seen, although yes, it has recovered somewhat around 12% in today's trade. But I would suggest him that utilize this bounce to exit this position, because it is having good amount of resistances around 170, 180 odd levels. So that should be the point where he should be considering exiting the position.
Okay, and Prashant, we were just talking about PSUs and you had a positive view there. You said that PSUs could, see the kind of bull run that other stocks, other great sectoral stocks might be able to see. But from a banking perspective, is microfinance a good pocket to stay invested in? Because don't you think it is going to risk returns of investors?
I'm very much negative on microfinance companies, and we have discussed this many times on the same show. So with respect to Fusion Finance, again, the stock has really underperformed. If you see the 52-week high, it is almost more than 500 rupees. And if you see the correction, despite markets went to all-time high, even that point of time, the stock did not perform well. Maybe because the prices are so much down right now, there may be some kind of bounce with respect to stable or a very neutral earnings going forward. But I'm still continuing to have a negative approach on the stock. two reasons why. Again, there were rise in their NPAs despite other small PSU banks. They have done a very good asset turnover ratio with respect to their NPAs. They have been very much less. But in this again, the stock, the NPA have grown to almost 12% compared to 3% last year. So I think that was the one reason why the stock has cracked down. Second, again, elevated credit cost, which has been hitting their any margins which are in negative right at the point of time. So I think if he is holding, I think any rise in the stock should be used to exit the stock at this point of time. And there are many other small PFCs, like again Canara Bank could be one example for him to buy.
Okay, got it. And now we have Amal. He's calling us from Kerala. Hi Amal, good evening.
Hello, good evening, ma'am.
How can we help you today?
I want to know more about Zomato stock fundamentally. Because I am happy with the fundamentals, but the earning per share is a bit high by looking to the industry's earning per share. I want to confirm that the best area to enter the market.
Okay, and do you hold any shares of Zomato at the moment?
No.
Okay, you just want a view on this one, right?
Yeah.
Okay, got it. Prashant, let's talk about Zomato. Amal wants to know your fundamental view on Zomato, and the space is very interesting. We have had a mixed bag of reviews on platform companies because of tight competition, fight for more dark stores, and just concentration on deeper penetration in India. What do you think about the space, especially with regards to Zomato? It is, as Amal mentioned, that he finds earnings per share as a pain point. He's doubting the current levels of the EPS and also PE, right? It looks expensive. What do you think about the valuations of Zomato, and should Amal invest in this currently or not?
Now let's talk on the industry first. Again, the industry is growing very fast, almost 30 to 40%. This is the only industry in India right now is going fast because it's a food and e-commerce based business. People are now habitual getting a lot of things very fast in their hands. I think 10 minutes, 15 minutes of food or any other groceries they would like to have it at home. So this is the market leader right now. Again, Swiggy is again a competitor, but again it is holding almost 40% market share, and this guy is holding almost 45% market share. So two companies are holding 90% market share, and there are a lot of other companies like Zepto or even Amazon is trying something. Even Jio is trying to do something in the quick commerce as well as quick food delivery businesses. But overall, I feel this should be a portfolio stock. Not considering the valuation right now, I think 200 can be a good level to buy in terms of price, but not in terms of valuation, because in a new age business, one should not look at the PE as a valuation matrix. There should be something on the sales, on the GMV, and a lot of gross order values and all. So I think that is growing very fast. With respect to the industry comparison against Swiggy, Zomato looks very good because now it's part of index also. But I will recommend him to add Swiggy also in his portfolio. Don't only be one-sided with respect to Zomato, because these two stocks will do better in the long term. Again, I think the returns can be anywhere between 15 to 20% on next 1 year. Again, it will continue to be giving you that kind of CAGR returns for the investor.
Okay, understood. And now we have Krishnan. He's calling us from Kerala. Hi, Krishnan. Good evening.
Yeah. Good evening. I have Tata Steel, okay, 470 shares, and I purchased at the rate of 113 rupees.
Okay.
So currently my profit is around 21,400.
Understood.
So I would like to know the steel prospects in the upcoming months. I just want to know for 1 year from now whether it will further go up. How steel looking like?
Okay, got it. Before I take up your query, Krishnan, I'd like to just give us, some context as to what's happening with the metal and steel space, right? Donald Trump, the president of US, has been talking about imposing tariffs on aluminum and steel, and the metal players in India have been asking the government to impose safeguard duty to protect the steel industry domestically. And today we got to know that the government is proposing plans of imposing 12% safeguard duty on steel imports. Now, because of that, if we can pull up the Nifty Metal Index just to see how the stocks have been reacting to this news, and you'd see that most counters in the Nifty Metal Index have been reacting positively. And therefore, this becomes really important as a space. Like you'd see, apart from two stocks, every other stock is in the green. And therefore, this becomes really important. I would want to and therefore I would like to take this view in this context. Tata Steel is also one of the gainers, in fact, in the metal index counter. Prashant, Krishnan holds 470 shares of Tata Steel at 113 rupees a piece. And from the next 1 year perspective, do you think this is a good bet?
I think yes, he should continue to hold the stock. Two reasons. Again, there is one reason you already said it with respect to safeguarding Indian steel industry with the import from China and other aluminum products. If you see the charts again, see January it was almost trading at 121. So I think it was trading almost near 120 levels. So from as soon as Trump took his charge, and then metal as a sector started growing very fast. So Tata Steel has outperformed the markets in the current levels. I am very positive. I think he has to continue to hold the stock at least for 180 to 190 levels for a medium term to long term. But overall, I think for more than 1 year also the stock looks very good. Lot of demand would come with respect to reconstruction of Europe, and with respect to Ukraine and all. I think steel would have been very much in demand for next 1 or 2 years. So Tata Steel would be the best beneficiary with respect to the stock.
Amazing, sounds really good. And Gaurav, what's your view on Tata Steel looking like?
Yes, on chart fronts too, Tata Steel looks pretty much impressive. Another 10% rise, which can take it to 170, is pretty much possible in the immediate near term. Long term also, the stock is pretty much well placed. But I'd like to add one more thing to one's portfolio. He can add NMDC as well at current levels. It is really cheap, very cheap available at attractive price also. Currently just about 69 odd levels, and it is looking pretty much attractive. 80 is pretty much on cards, and thereafter even 90 is also possible in the next 6 months or perspective. So Tata Steel and NMDC both are looking quite attractive.
Okay, and let's go across to Srinivas. He's calling us from Mumbai. Hi Srinivas, good evening.
Hi madam.
Hello, how can we help you today?
Recycling look opportunity in the mid-cap stock, madam, recommendation.
I'm so sorry, Srinivas. Can you please repeat your question?
Recycling team.
Okay.
Best of the stock opportunity. Fundamentally the strongest stock. Long term 5 years.
Understood. Okay. So just to reiterate Srinivas's query, he is asking for good counters, preferably mid-cap, for the next 5 years in the recycling space or the waste management space. Prashant, I'd like to take your view on the space as well. And then if you can also venture into giving us a couple of stocks in the waste management space you see, because sustainability is such a big theme. Tell us your view on waste management and recycling.
So again, the municipal waste management, I think this is the only stock which is listed and managing this kind of business model. Valuations are very much decent, but returns are very much decent again. So as a long-term investor, obviously he can hold, because this is the only one stock which is managing the municipal solid waste management pan India. So I think that would be one stock which can have a hold. But again, we discussed about Enviro Infra, which is into water treatment, water waste management treatment business. So I think that with respect to return ratios, I'm very much comfortable to add that stock anywhere between 200 and 210. So he can add this stock for a long-term investment again.
Okay. And Gaurav, do you recommend Enviro Infra as well? And what is your view on Antony Waste? Because, Prashant mentioned that although it has given decent returns, I'd like to know from your perspective for how long or what kind of trajectory do you see for the stock in the next couple of years?
Antony Waste on chart front is not looking very much attractive at the moment. Clearly in line with what the broader markets trade, completely good amount of profit taking witnessed, trading from, falling directly from 850 to quoting somewhere just above 500 now. So from a technical standpoint, it is a void as of now. And the other stock you were discussing, that can be considered, Enviro.
Okay. And now we have Pramod. He's calling us from Gurgaon. Hi, Pramod.
Yeah, hi.
What's your question today?
My question is for Zen Technologies.
Okay.
I'm holding 100 shares of Zen Technologies. My average buying price is 1695.
Okay.
So my query is, how long should I hold? Should I hold it or not? Or if you advise me to hold it, how long should I hold?
Okay.
I am looking this share with a long-term perspective,
Understood.
2 to 5 years.
Understood, Pramod. I'll take up your query and ask this question to Prashant. Prashant, Pramod holds 100 shares of Zen Technologies at 1,695 rupees a piece. The stock was up close to 1.28% in trade today and is currently hovering around 1,200 levels. What does your long-term perspective on Zen Technologies say? Can our viewer add more units of Zen Technologies at the current juncture, or should we wait for a further downside?
Yes, I think my advice would be add more at this point of time. Two reasons again, numbers are really good with respect to their quarterly earnings. Again, valuations are very much decent at this point of time when we consider the return ratios of ROC and ROE more than 40-30%. So that kind of return ratios will obviously come with a little bit of higher P and little bit of higher price to book valuation. But again, they have acquired 3 companies recently, and that will start delivering a lot of businesses to the companies going forward for the next 12 months. So I think it's the leader defense training solution companies, and I think a lot of government focus, a lot of government based contract in the Navy and defense, they're going to train a lot of things. So I think with respect to drone also, they have done very well. I think a very good technology promoter the company is holding again. Overall, very positive, hold, add more at this point of time.
Understood. Got it. And let's take up another query. Sunil is calling us from Gurgaon. Hi, Sunil. Namaste.
Namaste, ma'am. Good evening.
Good evening. Please ask your question.
I have queries about 2 stocks, if I can ask that. One is Yes Bank, of which I am holding 16,000 shares at 18.50. And the other one is Asian Paints, which I am holding just 75 at an average cost of 2,873. I'm a long-term investor, so I would like to know what is to be done.
Okay. Can you please repeat your buying price of Asian Paints?
Asian Paints is 2,873.
2,873, and how many shares?
75.
75 shares. Okay, got it. Gaurav, I'd first like to know your view on Yes Bank. Sunil holds 10,000 shares at 18 rupees a piece. And, in the past 6 months, although it has risen close to 30% in trade, what does the stock look like to you from a technical standpoint? Do you see any room for further growth from where it is currently trading?
Yes, it is trading close to its support level. Some bounce has also been witnessed. So it is better to hold on to a position, keep a tight stop loss at 15.7, hold on to the position and look for targets close to 19 odd levels, which is pretty much possible in the next 1 odd month. It is better to hold as of now.
Okay, got it. And Prashant, I'd like to quickly take your view on Asian Paints, an interesting stock, highly competitive space. Do you think Sunil will be able to make profits out of this investment?
I think yes, as a long-term investor, that may be a limited upside from the current levels, only because of the raw material crude, which is helping them to get some kind of better EBITDA margins in the coming few quarters. But again, with respect to volumes, because of high competitive, again, 2-3 new competitive pressures are coming with respect to Birla as well as Jindal, which are eating some kind of market share of Asian Paints from last 1.5 quarter. But again, the stock may not outperform the markets. But only reason why I am giving my recommendation as hold, because I think Q4 and Q1 earnings may be better than expected, and that can give a small price target up to 2,600.
So limited upside for Asian Paints, but we see a better performance in Q4 and Q1 for Asian Paints. Hence, you should hold your shares at the moment. Now, we have Dilip calling us from Gujarat. Hi, Dilip. Good evening.
Good evening, madam. I have a query regarding one stock I am holding, DB Realty.
Okay.
I am holding 100 shares of DB Realty.
Understood.
Which I purchased at the rate of 187 rupees per share.
Okay.
So, should I continue to hold them, or should I exit my position, because I am suffering a loss in this position?
Understood. And when did you purchase these shares?
These I purchased 2 months back.
Okay. 2 months back. Cool.
On the news that they have got big land bank, which they are willing to capitalize. So that was the trigger.
Understood.
Yeah.
Got it. So DB Realty, that goes by the name of Valor Estate, was up close to 3.5% in trade today. Currently hovers around 127 levels. But as our viewer mentioned, he's a little skeptical about this particular investment because of the kind of losses he has made just in the past 2 months. Gaurav, what is your view on DB Realty? Will this loss be able to flip into profits anytime soon, or will Dilip have to wait for some more time?
Yeah, we'll have to wait for some more time, although some initial signs of some consolidation are visible, but I'm still not sure whether the stock will be able to reach out to that level or not. What I can see as of now is it is better to hold the stock with a tight stop loss at 115 and look for targets close to 150 in the next 2 to 3 months. That is what is visible as of now. But from a long-term story, no, I'm not very much optimistic on this stock. It has already, started profit taking, started falling long before the market started tumbling down. In the last year, in the month of March only, it started falling from its all-time high, which were close to 280 odd levels. Currently, it is trading around 127. That clearly narrates the story what's going on in there. So it's better to just take a stop and exit.
Got it. Understood. And very quickly, let's move on to our next caller. Keshav is joining us on the phone line from Coimbatore. Hi, Keshav. Good evening.
Hi. Thanks for this call. I will quickly ask my question.
Sure.
So this is regarding IndusInd Bank. Okay. I am holding 510 shares.
Okay.
As an average of 978.86.
Okay.
So I am already in the loss of 1.45 lakhs. So I would like to know whether I can hold this share, because I'm clueless here. I'm completely, in the gray area. So what's happening on that side?
I understand.
So my plan, I want a suggestion from the experts that whether I can hold it or I can accumulate, or how is it like?
Understood. Keshav, I understand you applied with regards to IndusInd Bank. And Prashant, what is your view on IndusInd Bank at the moment? It has gone through a turmoil recently. Take us through the investment strategy that you think would be right for IndusInd Bank.
I think with respect to valuation at this point of time, again, the stock has slipped down to 1 price to book value, currently trading at almost 0.85. So I think with respect to the bank as a system, again, I'm very much comfortable to hold this bank at this point of time. Short term, there may be some kind of volatility due to the updates of the recent mishappening which happened last 10-15 days back. Even RBI is supporting them. A lot of credit agencies are supporting them with respect to saying the bank is really good in and a stable rating for the banks. But overall, I think one is to wait for more clarity once the internal bank report as well as the RBI report comes out by the end of this month. So if there is some kind of correction more in the price, so I think that would be a good opportunity to add more. I will advise him to hold more, at least for 12 months. There will be a fast recovery once the fourth quarter goes on, and first quarter the performance comes back with respect to their profitability. But overall, it's a strong bank, a stable bank, but wait and watch for the report which will come by this month end.
Okay, so overall strong bank, but wait and watch should be your strategy on IndusInd. And with that, Gaurav and Prashant, thank you so much for joining us in this edition of Ask Profit and answering all the queries. And viewers, you stay tuned to NDTV Profit for more news and updates, as there's a lot more lined up for you on the other side.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges, both NSE and BSE.
The Reserve Bank of India's supervisory officers, they are seeking compliance reports on their foreign currency borrowings by these banks.
The DSS is, actively engaging with the Reserve Bank of India to sort of ensure the thorough examination of the matter.
IndusInd Bank, as part of its internal review, had found that certain aspects of its derivatives portfolio was not meeting the standard that was set by the Reserve Bank of India.
Very warm welcome to you all for this NDTV Profit Conclave, which is themed on Viksit Bharat.
A life which is both taking care of your material needs and taking care of your altruistic needs. That will be the true definition of Viksit Bharat.
In my view, we are already out of that slowdown.
For every anlom, you have to have vilom. You can't just keep doing up and up in the breathing also. You have to come down. So the correction and healthy correction is a very, very integral part of the market.
The private capital expenditure, from where I sit, I see that private capital expenditure is happening.
Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected.
We feel fairly good about the fact that we can compete with various folks.
Actually, instead of Viksit Bharat, we should call it Re-Viksit Bharat.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
He sold most of his stock, 80%, as on that date.
We have requested the management to come and speak to us. They asked us, what questions will you ask? We've sent it to them. They don't want to answer it, so then let's put it to our viewers as well.
7 key questions, right? How is it that 2,000 crore goes unnoticed by all of these auditors?
Is seeking more information on the trades and the all the transaction which has happened from the exchanges both and
Stock markets experience a winning streak with benchmarks rising for the third consecutive session. The Nifty has surged above 22,900 mark, while the Sensex is up by 148 points, closing at 75,449. Meanwhile, US markets opened with a cautious optimism as stocks showed modest gains ahead of the Federal Reserve's crucial decision. Sources tell NDTV Profit the steel industry will meet Commerce Ministry to urge a reconsideration of the quantum of steel safeguard duty and to make the duty permanent. The ship is captained by only one captain, says Sanjeev Bajaj, MD and Chairman of Bajaj Finserv, as Alliance exits Bajaj's joint ventures. In an NDTV Profit exclusive, he also adds the board will soon decide on the listing of its insurance businesses. And the world celebrates as astronauts Sunita Williams and Butch Wilmore, after an unexpected stay at the International Space Station for more than 9 months, returned to Earth. Delhi High Court comes down hard on Rapido, giving them 4 months to fix accessibility issues or then wrap up operations in India. This after petitioners said the app fails to cater to the needs of disabled individuals, raising serious questions in terms of ensuring equal accessibility to the services. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we'll bring you the latest on markets, but also on national and international news. Let's take a look at what's happening in the markets today. Benchmark indices ended in the green for the third consecutive session, supported by a strong rally in mid-cap stocks. Now, the Nifty mid-cap index surged over 2.5%, marking its largest intraday gain since June the 5th last year. This robust performance highlights renewed investor interest in mid-cap companies, which outperform the broader market. Puneet now joining us with a complete market roundup to provide deeper insights into today's session.
Well, it was a very interesting session in trade today, seeing a lot of positives after the last couple of days as well. And we saw broad-based growth in terms of stock price performance across the Nifty 500 today. 5 key factors though that were prominent in the market. The first one was that the Nifty is closing very close to the 23,000 mark, a very positive trend, because over the last couple of days on the F&O factors as well, we saw that the support for the Nifty was around 22,200 to the 22,300 levels, while the resistance was at somewhere around 22,700. It has increased now to 23,000, and a very key positive factor for the market, where we've seen broad-based performance of the stocks doing better over the last couple of days. We've seen the second key factor that we've seen sharp growth as well as, outperformance in certain sectors such as Nifty Auto, that's been doing very well, and Nifty Realty has also made a very good comeback after roughly over 30% fall ever since September of 2024. The third key factor was the Nifty IT though. That was a key dampener to the market mood, but we still tried to fight through that across the other sectors. We did see today a Citi note where the brokerage has cut target prices for 10 of its companies in its coverage, while its upgraded emphasis has also cut the target price to about 2,375 rupees per share. But we did see that the top 4 IT heavyweights, very, very impacted because of this particular note, apart from the multitude of factors that we've spoken about, including the tariff as well as the recessionary impact in the USA. The other aspect was that except the FMCG and the IT space, we saw all sectoral indices trade in the green, and finally the Realty as well as the PSU Bank index were outperforming in the market today. When you look at some of the key stock action, we saw Shriram Finance being one of the top gainers of the Nifty. We also saw the 4 IT heavyweights down in the session today, and that continued across the day as well. Apart from that, we saw the breadth of the market on an overall basis being favorable for the second straight day in a row, continuing the start of what we saw something yesterday. But going forward, it's been a positive aspect as well. Finally, sectors such as defense, infrastructure, as well as, market intermediaries were also positive. So we did see positive stock action on something like a Hindustan Aeronautics, GR Infra, CAMS, as well as a BSC. So it'll be very interesting if we can maintain this kind of growth momentum in stock price performance tomorrow as well, which is of course an expiry day. But overall, today was a very strong session for the index as well as the broader markets.
Thanks, Puneet, for that update. Meanwhile, N. Jayakumar, the Group CEO and Managing Director of Prime Securities, recently shared his insights on the current market landscape. He believes that artificial intelligence is disrupting sectors with substantial investments, particularly in technology. However, he anticipates challenges ahead for the IT sector, but in contrast, also expressed strong confidence in the pharma sector, predicting it will remain largely unaffected by these disruptions. Let's listen in.
I think there are problems in terms of the way AI continues to disrupt, whether it's the low cost, arguably low cost DeepSeek model, or it's the, invest till you go blue in the face kind of OpenAI, Anthropic kind of model. Whichever way you look at it, there's a lot of money chasing a space which is clearly disrupting existing businesses, whether it's the legal space, whether it's the medical space, whether it's the finance analyst community. I think there's going to be mass disruption. And therefore, I'm still unclear what the impact of the manpower-heavy IT services business in India will do. So that could be weighing pretty negatively on the sentiment as far as the index is concerned. There could be a bounce back, a sort of reflex rally that takes place. But I think there are headwinds ahead, business-wise, as far as the IT is concerned. But compensating that could well be the financial services space, and which we've talked about, especially banks and private sector banks in that. And the other space, and private sector banks that were beset by problems of, let's say, the MFI or the credit card exposures, if you will. All that has changed with the government spending having stepped up dramatically, RBI having eased liquidity. So the money flow in the system, back-ended as it might be for this 24-25 fiscal year, has actually helped in recovering a lot of these spaces. And I think recoveries, collections, etc. will improve quite dramatically.
And as US markets opened optimistically but cautiously, all eyes are on the Federal Reserve's Federal Open Market Committee that assessed its progress in combating inflation and deliberating potential adjustments to monetary policy. Now, we're going to expect the statement later tonight, but market expectations suggest that the Fed will maintain federal funds rate in its current range of 4.25% to 4.5%. But there is a wait-and-see approach amid these persistent economic uncertainties. So joining me now is Arvind Sangar, Managing Partner at Geosphere Capital. Good morning and good evening from India. Arvind, with the chance that the Fed maintains the higher interest rates, understanding from you, how might this influence the Indian rupee and India's foreign exchange reserves as we all keenly await this decision?
Well, look, the Fed is clearly, it's pretty much a given that they're not going to do any change in policy in terms of the rate decision. What will be watched keenly is the press conference that comes after that announcement to see what their inclination is in terms of the impact of tariffs, in terms of some of the uncertainties that are created. So there's a downside risk to growth from the uncertainty and the tariff, turmoil. On the other hand, there's a potential for price increases, inflation, as those costs are passed on to consumers. So how the Fed is reading the tea leaves, how much are they willing to stick their neck out and give some guidance? My bet would be that they're going to be very circumspect and say they're just going to watch the data and they're just going to watch the policy. So it'll probably end up being a non-event by itself, but it'll clearly signal that the Fed is concerned on both sides. And if it does that, then markets can't really party too much without watching the same data that the Fed will be watching.
So then how would the Fed's policies influence, if I were to ask you, India's ability to attract greenfield investments, especially as we seek to strengthen its role in global supply chain?
Well, look, there is a new set of tariffs coming in April, and it's very clear that the next set of tariffs are going to be driven by reciprocity. So India has some of the highest tariff barriers, as President Trump has identified and mentioned several times, and as this data shows. So I think that it's not obvious how this is going to play out and who is going to benefit. Clearly, there's a strategic challenge with China, in which case India should win. But India also may need to think about some of the tariffs versus the US. There's been talk about India increasing its tariffs on steel, on Chinese steel, which is not a problem. But if India, lowers its tariffs on US goods, it would benefit, because if the goal is to benefit from the China plus one, then the goal is to probably do things that will make it an attractive option for US companies. So I think there's an opportunity here, but it'll be a little tricky path, and I suspect that the government is well aware of what the issues are, and hopefully they're able to find a way to take advantage of what's coming. And from a risk standpoint, the US Fed wants the US administration wants a weaker dollar. That clearly benefits investments outside the US. They think that will help US export competitiveness. But the reality is, from an investor interest, I think countries like India would benefit from that.
Absolutely, Arvind Sangar, thank you so much for that perspective. This is as the decision will actually come later, but like you rightly said, a non-event, but still signaling that maybe the Fed is concerned either way. Thank you so much for your insight. And in news coming in now from outer space, astronauts Sunita Williams and Butch Wilmore may have finally arrived on Earth after 9 long months. Their SpaceX capsule landed in the Gulf of Mexico near Tallahassee, Florida, but they will have to undergo quarantine and medical supervision before they can interact with other people and go back home. ISRO and Prime Minister Modi have both relayed their congratulations to Sunita Williams, the Prime Minister even writing a heartfelt letter expressing his pride, wishing her a speedy recovery and extending an invitation for her to come to visit India. Meanwhile, ISRO Chief D. Dr. V. Narayanan was also overjoyed at Sunita Williams' return. And in an exclusive interview with Pallav Bagla, science editor at NDTV, he actually welcomed Sunita Williams. Let's listen in.
So Sunita Williams took the risk and gave you a broad smile. Overnight you saw it. Great feeling?
Really, it was a greatest feeling. Say, in fact, I was looking the entire mission as a techno manager. Because we are also executing the similar mission, and I know what is the type of complexity involved, the end-to-end mission. There is a thermal system, and when it enters, there will be heat generation, and the entire system has to work. I know the module is very nicely designed, but then this type of mission, always a little bit risk is there. That I think we have to openly accept. But then I was quite confident. Why quite confident? 100% confident. When people are asking yesterday morning, 10 o'clock, 10:30 itself, the moment the module got separated and first set of firing happened, thrust of firing happened, I was having 100% confident this mission will be very successful.
Thanks.
But only thing is, I wanted to see how the madam's feeling, when the Sunita Williams feeling. But I was so excited to see her smiling and coming out. That brought a lot of smile in my face also.
Meanwhile, these are just some of the health complications that Sunita Williams is likely to go through, as now it is a journey about recovery after almost 9 months out of space. Now, we look at Sunita Williams and the kind of health complications that she is likely to face. We know that they have been away for 9 months. Now, when you are in space, actually, these are just some of the health complications that you actually go through. One is constant nausea, and your feet can even shrink. So the next steps for Sunita Williams and the astronaut would be to, of course, be escorted in stretchers like you saw on your screen, but they will now have to spend time quarantining under medical supervision. And this is also to check for any alien pathogens that they may have brought back, and also to make sure that they are fit enough before they meet their friends and family after 9 long months.
Right. And as you mentioned, that spending months in space can be really brutal on the body, because without the Earth's gravitational pull, muscles shrink, bones weaken, and bodily fluids shift. Now let's go across our first slide on the screen.
Right. Now, Sunita Williams is back on Earth, but let me quickly now, as we celebrate the return, it's important, like I said, to recognize that their journey is far from over. Spending 9 months in space places immense strain on the human body, requiring a careful recovery process upon their return. So to shed light on the physical effects of prolonged space travel and the path to recovery, we now turn to my colleague Malika for insights into the challenges that astronauts face and how they rebuild their strength after such extraordinary missions. Malika, over to you.
Thanks for that, Sanjana. Now, as you rightly said, that spending months in space can be brutal on the body, because without the gravitational pull of the Earth, the muscles weaken, the bones of the body can shrink, and also bodily fluids shift. So let's go across to our first slide, and you would see let's go across to our first slide to see the kind of, symptoms that these two astronauts might be facing. And as Sanjana already mentioned to you, that astronauts' bodies undergo multiple changes in microgravity. That's the kind of condition they live in space. And they may face a variety of health problems. Bodies need to adjust to Earth's gravity. Let's take a look at the symptoms first to understand what exactly they're going through. The first point you would see is weaker bones and muscles. Now this cause, when an astronaut is spending ample time in space, what happens is they tend to lose a lot of body mass, and that affects their bones and muscles. As I mentioned, the bones can weaken and the muscles can shrink. Vision issues could be the second symptom that they might be facing, and this happens due to change in distribution of body fluids towards the head in a condition of microgravity. And by the way, this condition can also increase the calcium levels in the body, which could also lead to kidney stones. So that's a serious issue. Plus, fluid shifts can also cause intracranial pressure, and that can alter the shape of the eyeball, causing serious vision impairment. The next one you see is nausea, and on the next slide you'd also see baby feet. Now this happens because, as I was mentioning, that astronauts tend to lose a lot of muscle mass rapidly in space because they do not use their legs to support their weight. And therefore what happens is that when they return on Earth and gravity affects them, that happens and they are not able to balance themselves, hence baby feet and nausea. Let's take a look at recovery and steps. What kind of steps would be taken to make sure that they recover? The first one would be that they would be kept in a quarantine situation to prevent the spread of alien pathogens. The second one would be that after several days of medical examination, it's only after that they will be allowed to go to their homes, because remember, the immune system after spending 9 months in space takes a lot of time. And just a disclaimer that anybody who goes to space, any astronaut, even for a couple of days, could face serious issues with regards to their bones and muscles. So imagine the kind of plight that both these astronauts might be facing after spending 9 months in space. And the last point you'd see is that they can only go home after doctors have given them a clear instruction to go back home. And this is because even after 6 months, data says that even after 6 months, 93% of genes return to normal, but 7% remain disrupted. And that is why these are the kind of recovery and the steps that would be needed to make sure that both of them are healthy and are safe. Back to you, Sanjana.
Right, Malika, thank you so much for that. Like we rightly said, the astronauts may have returned to Earth, but the journey of recovery starts only now. Now, let's bring in some news coming in from India. Sources have told NDTV Profit exclusively that India's steel industry will meet with the Commerce Ministry within the next 10 days to present 2 key requests. One, they are advocating for an increase in the proposed safeguard duty on steel imports from 12% to between either 18 to 25%. Additionally, they are seeking a permanent safeguard duty, arguing that the current provisional 200-day measure is insufficient. However, the announcement of a 12% safeguard duty has already sparked a positive response in the markets, with shares of major companies like Hindustan Zinc, SAIL, Hindustan Copper, Tata Steel and JSW Steel rising by as much as 5 to 9% today. So to provide further insights into this development and the implications, I'm going to turn now to my colleague Rishabh for more details. Rishabh, over to you.
What we're hearing from our sources is that the steel industry, representatives from the steel industry are set to make a representation to the Commerce Ministry within the next 7 to 10 days with the 2 requests that you mentioned. One is to hike the safeguard duty that has been proposed by the Commerce Ministry at about 12% to a band of anywhere between 18 and 25%, 25 being the ideal mark for the industry, given that that was their demand throughout, starting December last year, which is when the DGTR had initiated an investigation into dumping. The second being, of course, the duty itself being provisional. That is something that the industry is not in favor of. They want more permanent protection coming in from the government. And given how big China is, given how massive their steel industry is, the potential that they have to sort of dump cheaper stuff into India, the industry feels that a permanent safeguard duty as well as a stronger safeguard duty will be better on both those fronts. Now, on the flip side, from the government, from what we're hearing from our sources in the government, is that the 12% duty that has been imposed seems to be sufficient, according to these officials. They've said that the DGTR, which is responsible for this investigation, they have arrived at this 12% figure after thorough investigation, after a 3-month investigation, and that it remains sufficient basis the scope of injury that they have seen in the domestic market so far. So this seems to be somewhat of a contentious issue that we will continue tracking for our viewers.
And the Adani Group has launched India's largest skill and employ program. This is an ambitious nationwide initiative designed to build an industry-ready workforce and strengthen the country's Make in India vision. In collaboration with the Indo-German Chamber of Commerce, the program aims to train youth in high-demand sectors such as green energy, manufacturing, high-tech, industrial design and project excellence.